growing up outside of Chicago, it would be fun to take the train down into the city or sometimes drive if I was old enough and to go see a Cubs game. Being surrounded by the city, it felt very intimate. And it was fun because you could get a bleacher seat for $5. And what was great about baseball, and I'm not really a baseball fan, I grew up playing soccer, but there's two things I loved about baseball. One, um, it was so slow that you could have really good conversations with your friends or who you went with. So I realized very early on if I was going to go to a baseball game, I better like the person I'm going with because we're going to have a 3-hour conversation. But the thing I like best about baseball is there are no ties. You don't tie in baseball. You just keep playing until someone gets a run over the other after the ninth inning. And I always thought that was a very clean way. There's a winner and a loser to each game. And I'm sure there's some much deeper metaphoric thoughts to that, but it's the one thing that stuck in my brain. Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend, I'm going to call it Final Inning. And I like this idea because by the time an asset is in its final inning, it's typically forgotten and hated or loved and praised. And it's any investment. It doesn't matter what it is. The NASDAQ in 1999, there was not a more loved investment on the planet. Gold in 1980, there was not a more loved investment than gold in 1980. And you could do everything in reverse too. The NASDAQ in 2002, the NASDAQ in 2009, or gold in 2012. And so this ninth inning idea, this final inning idea, really, there's this personality to investing that kind of like baseball, if things have not been finalized, we have some additional innings. And so with gold specifically, and I have 3 price charts I want to show you, with gold specifically, the question is, has gold bottomed? And I guess the way I want to answer that to you, if gold has not bottomed, it's in one of its final innings of bottoming, right? So is it in or did it finish its 9th inning of bottoming and it is now in a new game and in its first inning of the new game of going higher? Or in baseball, I don't even know if they call it overtime or not, but have the innings gone into overtime and we're in the 10th inning of bottoming? Now, we don't know that yet, but one thing that will help stack the weight of evidence in our favor, if you look at the price chart here, which is gold, and it's about a 5-year price chart of gold, gold is sitting above its long-term downtrending trend line. It's sitting above that, but right above it is its 200-week moving average. So when, not if, because it will eventually, even if it doesn't happen soon, when gold breaks above this peak right here, it will also have broken above its 200-week moving average. And that will be another heavy weight of evidence that gold, in fact, has bottomed, past tense, and its new game of going higher has begun. But we don't know that yet for sure because we're literally in kind of the 10th inning of bottoming, the 11th inning of bottoming. Or if it then does break up, we will then say, yes, gold, in fact, did bottom back here in 2015 after falling for 3.5 or 4 years. So we're going to have to wait and see. The other question is with the SP 500, is the S&P topping? Is it topping? And we won't know that until it actually breaks below its 2016 lows. Now, we know the central banks, the major central banks of the world want this thing to go higher. They want their own stock market to go higher because they believe that will create some sort of wealth effect, and it will for the top 1 to 2% of that country. But the other, let's be fair, maybe the bottom 95% will not really be affected by it that much. So we don't know if there are extra innings in the S&P going higher. Right now, we don't know that. Now, if the S&P breaks above this ceiling right there, that resistance line, and moves higher, it's going to be on the back of central bankers doing something deeper with their negative interest rates or money printing. But right now, for the last 24 months, it is bouncing between those two lines in a 15%-ish channel. So we don't know yet if that is in its final inning of topping and it's going to start breaking down and finally relieve itself and just get some relief and go lower, or if we're going to get some extra innings from the four largest central banks and go higher another 10 or 20 or even 30%. So it's kind of, and I've talked about this before being in a holding pattern, but maybe this metaphor of baseball, we don't know yet because there's kind of a tie going on, and so we need extra innings. And then the last major asset class I want to look at, and look, whether you like the US dollar or not, or like the SP 500 or not, or like gold or not, those are four major asset classes that have been on this planet, depending on which one you're talking about, for a very long time. The US dollar has been around since 1776. The S&P has been around for about 115 years. Really, it hasn't. It was started in 1957, but if you use it as a proxy for the U.S. stock market, it's been around. And then you have gold that's been around about 2,000 years being used as the original investment. But you look at the dollar here, and back here in 2012 and 2013, and most part of 2014, the dollar was really stuck in a channel and in a very volatile way, but it really wasn't going anywhere. And then it broke out in a very large way in 2014, the same time that oil broke down, and it has moved up into a channel, and it is still in that channel. And this is a weekly price chart going back about 5 years. And so we don't know. We don't know if the US dollar is going to stay in that channel another year or maybe even 2 years. But what we do know, because we can see the correlation right here as the dollar has fallen, not in a big way, only about 4%. During that fall, gold has really taken off to the upside. Now, you can't say that's the only reason gold has gone up, because over here, we had the same type of fall and gold kept falling, right? And over here, we had the dollar fall and gold was falling. So there's not an exact correlation between gold and the US dollar. But what we don't know right now is, are we in the final inning of the US dollar topping? And in fact, it's going to break down and give a lot of relief to the S&P 500, because 55% of the revenue from those S&P 500 companies is from overseas. So we don't know that yet, but we're really in kind of the final innings of these three major asset classes. And the thing is, and here is the takeaway, really being patient right now. Stepping back, looking at those weekly price charts, looking at a price chart of 5 years, maybe even 10 years, and just being patient, saying, look, things are changing. Gold broke out of that downward trend, right? It has broken out of that, but it still has that resistance of that 200 week above it. The US dollar is still in its sideways channel of about 15 months, and the S&P 500 is still in its channel that's about 24 months. So patience will pay off, but what we do know is things are hated the most at the bottom and revered the most at the top. Though it's kind of funny, because the S&P is not feeling very revered lately. People feel like they've maybe been forced into it, and any sign of weakness and people really step aside and either just stop buying or literally take their money out. And same thing with the US dollar. Yes, over time, the US dollar has been losing value, but look, it's been losing value from the year it was made, from 1776. So, all fiat currencies on the planet lose their value somewhere around 2% a year. So patience will pay off to those watching the S&P, watching gold, and just following their system. Have a patient time this weekend. Thank you so much for being in my world, and I appreciate you being here and listening to my podcasts. Thanks so much. Hey everybody, next week on Thursday at 10 a.m. I'm having a training called Peak Gold, and it's going to go over three things very specifically. Why gold? Why gold now? Why not stocks? Why not bonds? It's going to talk about why exactly gold is the thing that's going to, for many people, reestablish their control and their security over their future. That's one. The second thing it's going to go over is how to know to get in and how to know when to get out. I'm not a believer that you should have 5 or 10% of your money in gold at all times. There are long periods of time where you do not want to have gold in your portfolio, and there's long periods of time when you do. And I'm going to go over how you know when we're in those periods. And then the third thing I'm going to go over is what type of gold you want to own. Physical, paper, physical backed paper, silver, junk, precious metal mining, small cap, large cap. Go over the types of way of ownership. And I call it peak gold because I believe that there will not be enough gold to go around when the central banks of the world finally say, okay, this is how we're going to pay off our debt. This is how we're going to clean up our balance sheet. And they're going to do it with ounces of gold. Namely, the two largest economies on the planet are going to do it. One is going to be China. One is going to be the US. I don't know which one's going to move first, but I'm willing to put a dollar wager that the Chinese government and the US government will have very similar amounts of gold in the next few years, if not already. So peak gold, how you sign up for it is very easy. Go back to the email you got that took you to this weekend's podcast. And in the PS, it will take you to the GoToWebinar link that you can sign up for. Thanks, guys. You take care. I'll speak to you soon.